The job market as we've experienced won't exist. It's not going to exist for my 15-year-old, let alone my 6-year-old.
Especially when the robots come, because they are coming, guys. They are coming. I think we're going to be both utopian and dystopian at the same time. Start slow. Doesn't matter how much money you've got, start small and let the framework prove itself. The wealthy don't pay taxes, they pay.
Welcome back. Another episode of Remnant Finance. I'm excited today to introduce a friend and the owner of Low Stress Trading, Troy Broussard. As we've talked about in past episodes, we've gotten involved in it and are just having an absolute blast and making a killing on the growth side of the capital equation. Troy's done a ton of cool things. He was a Navy nuke engineer. He was a real estate developer. He's been an SEO expert where he had a massive business and was extremely successful, jumped into software as a service development, and now has become an exceptional trader and has made it his life's end to teach other people how to do this and break free of this inflationary system and fiat system and how to beat it and survive and thrive for your family. So it's an awesome, it's just such an awesome purpose you have, because you're helping families beat what's happening in the world right now. Not just inflation, but you sent an email today, and man, did that resonate on the AI and how that's changing the world and people getting laid off. And will we need nurses? Will we need pilots? Will we need
people aren't getting that.
Yeah.
They aren't realizing how fast AI is going to hit them. And when you talk about AI, I can't do it without like talking about Elon, because this guy is friggin' brilliant. Like, people don't know the level of brilliance that he is and the depth of his business planning. So, he created a neural network and he got somebody else to pay for it. And the way he did it is he already had in his head of, Tesla and the electric cars, but he already had the vision of them being autonomous driving cars from day one. Like, that was his vision all along. Well, he also had, SpaceX. And so what he did was so brilliant. He used SpaceX and the contracts that they got from NASA and everybody else, and he used that to finance building his Starlink network, because every time they would do a rocket launch, he would throw some extra payload on and deploy a bunch of Starlink satellites. And so he really got paid to build his network, and that network was the infrastructure behind what is now the autonomous driving of Tesla. But going to be so much more. Like, Optimus Prime is right around the corner, and that'll be driven by the same neural network as hundreds of thousands of GPUs, and it's like the brain center of everything that he does AI. Well, that's the power behind everything in the neural network, right? But it's also going to be tapped into by Optimus Prime. And I don't know if you guys even know this, but do you realize that Tesla has a division of Tesla that is making airplanes? They are 4 or 5 passenger, like Cessna competitive airplanes that are electric, that are a quarter of the cost of like a Cessna. So instead of $1 million little 4-passenger, 1970s Cessna bolted into a new frame, right? Instead of getting that, you get a brand new electric airplane for like 250,000 is the pricing area that they're targeting. And the thing is autonomous. It doesn't use a GPS, it uses Starlink, which is a low orbit network. And so now you've got, think of it as like, self-driving Ubers only in the sky with this network that he's built the infrastructure for. So like, man, when we think of AI, like, I don't think people really understand how transformational it's going to be and how fast it's going to take over, right? Optimus Prime is only a few months away from starting to roll out. And it's just going to be something that's going to transform the entire industry.
And it's at the cost of a low end sedan. That's what people don't realize. Like, they're going to be everywhere.
Yeah. I mean, they're talking about like $25,000 to $30,000 Optimus Prime robots. I mean, that will completely transform the industry. Anybody is going to do that can afford it. I would buy one for 100,000 today just to, be my assistant, help me out with the workouts, be my nutritionalist, and, relieve my wife from doing anything around the house. Like, hell yeah, sign me up. 100 grand. I'd sign it over today.
Yeah, you talk a lot, while we're talking about Tesla, before we get into why that's so important, you talk a lot about, and people don't realize this. I've brought it up over and over too when I chat with people. Like, it's not a car company. It is an umbrella company of 15, 16 other companies, all of
Yeah.
which are thriving and changing the world. You know, he's
Yeah.
he's he's the modern day Henry Ford, if you will. The only thing I fear with Tesla is it going to go the way of Apple because he's such a visionary, like Steve Jobs was. That's the only thing I fear. But he is, as long as he's here, he is absolutely changing the world at more of a rapid pace than I think anybody ever has.
Yeah, and it's a good comparison with Apple because Apple has turned from a growth to an income company, right? They were a growth company when they had innovation, right? When they had Steve Jobs. But the management since Steve Jobs has passed, they couldn't innovate their way out of a paper bag. I mean, Apple has just gone to hell in a handbasket. And I love Apple. I love everything. I've had the iPhone since the original one. I've had MacBooks forever. I still use all Mac. They're the best of, it's kind of like capitalism when they say capitalism is a terrible system, but it's a terrible form of government. It just happens to be the best, better than all the rest, right? And that's kind of the way I feel about Macs. They're a terrible computer. They just happen to be better than everything else. So I still use them and I still love them, but their innovation has died off, right? But now they've got such a large market presence that they're an income company. Every model they release, they've got a built-in user base, and so they're going to make, money, but they've really plateaued, and I don't consider them a very strong strategic investment anymore. I think they're kind of turning into Walmart, right? They're just kind of a staple at this point.
It kind of ties into a thesis that we regularly talk about, which is essentially that the entire like paradigms are changing. The way Brian and I met was we had this exposure to the medical industry that totally disrupted our careers and changed our view on that industry forever. For me, that led to me exploring the financial strategy model. Is the financial planning industry actually working in our favor? And if you're listening to this, you know that we don't think it is. And so we approach financial strategy from a very, very different point of view, and that protect, save, grow framework. But in the vein of paradigms, everything changing, the last 90 years of S&P data to me now becomes essentially irrelevant when you're talking about how to grow and prepare for the next 90 years. And so talking about average rate of return, that statistic alone is totally flawed. It's irrelevant in your planning, right? When you understand, compounding actual returns versus average rate of returns. And so all of this data from the last 90 years about how we plan and think, I believe, is quickly being shattered because there's this new segment of the economy, which is the largest and most explosive. That's AI. And not even talking about the technological developments, just in the financial world,
Yeah.
these companies are now valuing themselves based on how much they can produce per employee. So they're trimming down. AI is inherently trimming down the workforce while they're having is it like a like a $1 trillion company experience a 30% annual growth with a smaller workforce? Microsoft just laid off a ton of employees, like you said in the email. The idea is that we're trimming down the workforce and exploding revenue. That shatters everything we've thought about. And that's why I think this strategy is so pivotal and such a thing that we all need to understand and pivot to in our financial planning, because you cannot accept like just the conventional financial planning right now. And you said something that I wrote down and I think about just about every day in one of the trainings, and I can't remember which one, but it basically, we need to be able to create money faster than the Fed. And that's sort of like that, we can't, because they're just gonna it's unlimited. But in our own lives, for what we need to do, we have to throw away the entire playbook of the last 90 years in the financial industry. I mean, the buy and hold, the value investor mentality, I think is collapsing, and it'll last the last generation of boomers that it's worked for, and they've got a comfortable retirement now. But I think if you're still in the workforce, you've got to find something new, and to us is the perfect strategy.
Yeah, it's interesting. You mentioned like the value methodology. Let me give you an example. Like, I was laughing at a post I saw on Twitter because they were trashing on this guy, because he's a billionaire and he only declared making like 10 or like $15 million for the year on his taxes. And we're just trashing him like he's got to be corrupt and this and that. And I'm like, actually, I'm surprised he pays anything. Right. And it's the same people that were like bad mouthing Trump when he showed like no income on his tax return. He's a billionaire. And because people don't understand, it's a joke, but it's not a joke. It's an inside joke. The wealthy know that it's not a joke. Everybody else thinks it's a joke. But the statement is, the wealthy don't pay taxes. They pay bookkeepers, accountants, and lawyers. And that is not a joke. That is the truth. People don't realize is there's like 2,000 pages of documentation in the tax code, right? And here's what people don't realize. 80% of the tax code, 80% of that is about what defining income is. It's whether or not something is classified as income and thus taxable or not. It's all the intricacies of how to move money around but not call it income so that it's not taxable. And this is why people like the flat tax system thing. It just doesn't work because it's not about what you pay or the rate you pay. It's about what is income. Right? And the wealthy will go invest hundreds of thousands of dollars to set up complex offshore tax strategies and all these different things and structures and entities. And largely that's what you guys do as well, right? It's all about just reclassifying what is income, right? And so when you look at technology and the stock market, I would say it's a very similar analogy because, okay, so before we get to the market for a second, just back up. Like I'm a tech guy, right? And so I have technology companies. And I've always argued with this when I take on investors or, sell a portion of the company, or I've sold a couple of my companies in the past. And it's a very short conversation because either they get it or they don't. And when it comes to tech companies, the valuations, we get back to that value word, the way you value a tech company has nothing to do with the way you value a traditional brick and mortar. It's nothing similar. And tech companies value anywhere from 3 to 10 times higher, especially if you're a SaaS-based company where you have reliable income coming in every month. And it's not about the way that the traditional finance does valuations, right? You've had billion-dollar companies that have no income. How is that possible, right? That fails every metric that the stock market would use to value a company. And so when you talk about the market, it's kind of that extension of that same thing, right? So, what we do in options is we take advantage of the trends, that paradigm shift that you have talked about. In the 80s, if you wanted to place even a stock trade, you had to call up your broker and pay him $20 and they would place the trade for you, right? If you wanted to do options trade, oh my God. I mean, it was just like painful, pulling teeth to be able to do an options trade. And the concept of rolling an option almost didn't really exist. I mean, it did, but the only way you could really do it is if you were wealthy and you had one of the terminals and all of that where you could do it yourself. But that's not the way most people traded. They would trade with their brokers. And so almost nobody did options. Well, then, we started getting monthly options and then we started getting kind of online trading and it started to bridge into that. But today it's a whole different paradigm, right? As you said, the paradigm has shifted. And guess what, guys? It's going to shift big time in a minute. I'll talk about that, where we're really headed. And I'm excited as hell for it. But right now, the paradigm has already shifted where most of the companies, not most, it's only about 10% actually of the companies have weekly options. And weekly options it's the catalyst. It's that small paradigm shift that makes everything possible in the framework that we teach. Because what we're doing is we're compounding, I call it hyper compounding. We're hyper compounding our results because we're not compounding 12 times a year or like 8 times a year, like a lot of trading programs do, because they're telling you to sell like 6-week option contracts and you're not getting much compounding growth with that. We're compounding 52 times a year because we only trade options on stocks that have weekly options. And then we do it in the safest way possible, right? It's kind of funny because you're in your guys' industry, you talk about being the bank all the time, right? Like some of the competitors call themselves being their own bank and all that. I'll play on the words, right? But that's what we are in the options as well, because we don't buy options. We sell them, and we're the bank. And the bank makes money if the market's going up. They get a lot more volume of loans. The interest rate's lower, but they get a lot more volume. They make a ton of money. The market goes sideways. They raise their interest rates a little bit. They still make loans. The market crashes. People still got to buy homes. The bank's still going to finance them, and they're just going to jack up their interest rates a lot more and make more money, right? So if you think about the bank makes money no matter what the market is. Doesn't matter what direction the market is going, the bank is making money because fundamentally they're loaning money for interest, right?
Mm-hmm.
And as option sellers, that's really what we do. It's the same thing. Instead of the interest rate, it's volatility that we talk about. The volatility in the market goes up and down. The market goes up and down or sideways, and the volatility will determine how much we get paid, but it's a beautiful framework because we're able to make money in any environment, right? And that's what I absolutely love about this entire structure and this framework.
Same. And I want to take you back to something that's bare bone basics that you said a lot for our listeners, and for some, one of the common questions when I talk about how phenomenal this is people say, I don't know anything about that. That's their, like, it's like this little micro hurdle that they can't get over. What is an option?
Yeah. And so the first thing you need to know is it doesn't matter if you don't know anything about it. Understand that, we've got like almost 1,900 students at this point, and the vast majority of them never even heard of options before they started. And quite honestly, the less you know about options, the more successful you'll be in the program. Our problem child, what's that?
I can confirm. I took a derivatives and options class in grad school, and like super deep in the weeds, and absolutely loved it. But it's like I went in knowing I had to consciously unlearn things, and it's better to just have a blank slate.
Yeah, it absolutely is. I haven't seen any tickets on the help desk, so you don't fit into this category. But most of the guys like you, I call them our problem children, because they think they know so damn much, and they want to complicate the hell out of what is inherently simple, that they cause us more grief because they can't get out of their head. They're trying to overthink it, and they're trying to do all this stuff, and you just don't need to do that. And the people that come in not even knowing what an option is, they just surrender. Like, they just surrender to the beginning, and they just say, okay, I'm just going to follow the framework. I don't know what the hell it is. I'm sitting here in this room where I had one of my lives, and I've got a big 16-foot conference table and all this stuff here around, and I do live group events and stuff. And I had one of my guys here that's in my Shark Club. And it was so funny because we're going around the table, everybody's introducing themselves and talking about their experience. And like the three people before him all had options trading experience, right? So it comes to him, and he's kind of feeling like a tard, right? Because he's like, guys, I don't know anything about options. I've been trading this for like 6 months. I still don't even know what an option is. I'm not even sure I could even explain it to anybody, but I do know I made $112,000 in the last 6 months. So that's all I need to know. I'm good with it. And I was just laughing because he had the best results of anybody at the table. And he just, kept it simple and stayed on track. So don't let that hold you back. If you don't know what options are, don't worry. We don't expect you to.
Yeah. It's funny you say that. I brought in my old commander, the '06, that he's been retired, and he first introduced me to options probably a decade ago, just sitting in the room chatting with him. And I was just like, I didn't have the money. I had a bunch of little kids in a house, and not, and I was just like, whatever. But he gave me a little pamphlet. I can't remember who it came through, and I read it. I still have it, actually. And so I kind of had a general idea. Well, I introduced this to him. He joined maybe 3-4 weeks ago. I chatted with him on the phone for about an hour driving the other day. And he said, I've been doing this for 25 years, and I'm completely shifting because this makes so much more sense. He's like, my whole mentality around it, I'm shifting to this framework. Everything I've done. That's pretty wild. It's that simple and that effective.
Yeah, and everybody's always trying to, like, I get the same objections over and over. I've done hundreds of presentations, and it's always the same stuff. It's always if this works now, how come it's not working for everybody, and blah, blah. It is. Everybody does it. Well, what happens if too many people come in? You can't. We got hedge funds moving hundreds of millions of dollars through this type of framework. There's no ancient Chinese secret, right? It's like the Calgon dish, you know what I mean? Like that old commercial. It's probably older than you guys, but that was hilarious. Like, it was always the ancient Chinese secret, right? There's no secret. It's just simple. The problem is it takes two things, and I think this is why it works so good with military. I think it really does. Like this is such a perfect combination for a military trained person because it only requires discipline and patience. That's it. And trust me, you learn patience from day one in the military. Like, do you remember going through your when you first are getting ready to go to boot camp and you have to go get checked out and they do the medical and it's like, you're standing there in your skivvies, ass cracked to elbows with everybody in line and, you're just sitting there for hours waiting to go somewhere. Everything is hurry up and wait. And you're like, scramble, scramble, scramble to get to that, and then wait for an hour, right? Like that's the whole problem. You learn that on day one, man. It is going to be a hurry up and wait career. Get used to it. So you learn patience, right? But you also learn discipline. And this framework that we teach, that's all you really need. We're not investors, right? I think that there's kind of different categories that people fit into with money. There's investors, there's traders, there's programs like what you guys primarily do. I would consider it has some aspects of growth to it, but it's more about protection, right? It's like more about wealth preservation and protection, right? And tax minimization, right? Which is another form of protection, because God knows we need every help we can, holding on to any penny we can finally scratch out of this world from the government trying to claw back 2 cents on every penny we make. So that is, is part of it. And so like what this fits into is it's not the protection side. It's not the buy and hold, or as I like to call it, as you guys know, the buy and hope system where I buy something and I hope it's going to go up, right? That's investing. We don't do that. We're traders, but we're income focused, right? We're income focused. And that's why I think it's such a perfect combination with what you guys do, because you guys help you hold on to your money. You help everybody, protect that money, minimize tax structures with it, all of those things. But I focus on the other end of the spectrum, and that's just making more, baby, make more. Print it faster than the feds can devalue our dollar. That's what we got to do.
And that's the key. Like you lived through, you tell the story, you tell it in your sales page. For anybody that wants to look at that, go to Remnant Finance/options. It'll directly link to Troy's sales page. And the very first story he talks about is growing up, and you took a student, was Rotary Club, I think?
Yeah, I went through Rotary as an international exchange student.
Yep.
And
in Brazil.
Funny thing is I was supposed to go to Switzerland. And I was all prepared. I had won the scholarship. I'd been booking my language training classes. I'd bought all of this cold weather clothing and everything to go. And like the week before, they said, well, we got good news and we got bad news. I'm like, yeah, what's that? And I said, well, the good news is, we found you a new place to go. The bad news is it isn't going to be Switzerland. I'm like, yeah, so where am I going? And they said, well, you can go to Brazil or you can try again next year. And I'm like, I'm going to Brazil then, right? So it was not planned, but that's the way it worked out. And when I went down to Brazil, it was a military government, and it was one of the worst inflations that anybody's ever really lived through. It was hyperinflation, 30% a month inflation. Like I would get $100 stipend from Rotary each month, and we'd exchange it only $10 at a time. Because if you converted the whole $100 on the first of the month, it was only worth $70 by the end of the month, right? So you would just exchange it as you needed it, $10 here and $10 there. And that hyperinflation, like it trained me to think differently, right? It was the negative example of compound interest, right? It was the negative example. And sometimes the best way to learn stuff is not through the positive, but it's the pain of the negative, right?
Right.
We get a lot of that in the military. We get a lot of negative based lessons.
We do. Yeah, they seem to never stop, man. The beatings continue until the morale improves, right?
Exactly.
So we live, everybody's concerned with inflation, and I've even heard you talk about it. Like none of us in America have experienced hyperinflation yet. No. But we all know that groceries 5 years ago were less than half of what we're spending now. Everybody listening.
But we only have 2% inflation.
Yeah, that's right.
I got a bridge I'll sell you in Manhattan if you believe that BS, right? I mean, come on. Wise economists kind of will speculate that inflation is more realistically around the 8 to 12% level, right? And the problem is the government just keeps playing the numbers game with CPI and just changes it and redefines what inflation is so that they can keep their targets and keep up this lie that we're in this 2 or 3% inflation world. And it's anybody that's paying their bills, anybody that's gone to Five Guys and realized that the whole family's burgers were, $35 last year. And today I took my son and we got a burger, yesterday, I took my son and we got a burger each, split a drink and split a fries, and it was $55, right? So yeah, 3% inflation.
Yeah, right. If you own a business, you have a potential, if a successful business, to mitigate that. The average person doesn't, because their wages are not keeping up with that. Any wage earner out there is stuck. They're just pumping more money out of their wallet for the basic standard of living. Hans, I see
and,
you have,
and that's why I'm so passionate about this, man. Because it's so this is my 28th company that I've built. So I've been around the block a little bit. I've built a few companies, and everything you can imagine, from cabinet shops to land development and construction. And I've done commercial and residential subdivisions. I've been a landlord with a bunch of tenants. I've owned real estate properties and apartment complexes, and I've done all of that stuff. And then I went online. I've been a programmer. I've done stuff in the consulting space. I was one of the top guys in automation in the world for several years, and trained everybody on marketing automation before it even became popular. And so, I've gone through all of these things, but what I can tell you is there's two different types of entrepreneurs that are selling information or teaching. Okay. There's the guys that are successful, right? And that's hard, by the way. It's really hard. It's not getting, there's more ways to make money today than ever, but it's harder to be successful than ever. Okay. So to hit that level of achievement is one thing, but the problem is the other shoe's got to drop. And if you really want to be uber successful, it's not about your success. It's about how can others replicate the type of success that you've had. And that's where most people fail miserably, because they might be good at an entrepreneur, especially like the military guys, because they just power through it, right? And that's the way I was, man. I work damn hard. I deform my own neck, right? Like I was a work hard guy, and that's what I would do. But the problem is, you can attain your own success, but how can you convey that to others? And I think this is where most people fail, and because they're not able to create a framework or a structure that other people can reproduce. And this is why so many people online fail, right? If you want to have an online business, guys, holy crap, right? You better become a copywriter. You better be really good at persuasive email writing. You better be do really well at speaking, and you've got to know technology to host webinars and edit stuff. Then you've got to get good with WordPress and managing your site and building small teams and outsourcing. And then you've got to deal with banks and merchant accounts, and the list just goes on and on and on and on and on, right? And so you've almost got to be like a gifted polymath in order to be successful online today. Really, really hard. But what's beautiful with this framework is I don't need a help desk. I don't need any staff. I don't even need a website. I don't need a domain. All I need is an email address, a phone, right? And a few $1,000s to invest and trade with. And not even that much, which, is pretty cool, because, we start out people with about $10,000 accounts. It's a good starting point where you have enough to really do something with. But most of our competitors require like, $100 to $200, $250,000 accounts to even like get a taste, right? But I think that's what's been so driven for me, like is the passion behind it, is that I've got this synergy of all the software development that I've done over the years into our own platform that we've designed, right? We own everything. We don't use somebody's membership site. Yeah, and it's not on Facebook. We don't even use Google Cloud or Amazon AWS or any of that. It's all stuff that we own. I mean, we're literally writing our own affiliate management stuff. We're writing our own help desk. We built the community. We built the training. We built the membership area, even our own hosting. Like, I don't know if you've noticed like the little shorts that we upload,
Mhm.
right? When we upload those videos, it them and does that everything completely automated. We don't have to run it through any software to do it. It's all done in house. And that's like the synergy of my development background, right? But it's a training program that teaches people how to generate their own wealth through options training. And all of that is wrapped up in this just like uber simplistic framework that, you know, is repeatable. We have people come in and they make their entry on the course. They make that first month's purchase back within 4, 6, 7 weeks, and they're already going forward. So that's what I'm excited about, because I'm excited about the difference that it's really making. And you guys see it because you're in there. And it's like we never ask or solicit them, and there's just people posting results every friggin' day, right?
And that's motivating. That's so motivating to see the people that have come, that were in there at the start with you, and a couple years later, they're posting what they've done. I mean, it's really, really motivating. And I'm comfortable sharing what I've done. Like when I started this, I sold some poor performing dividend stocks, and I started with $14,000. I paid back the initial costs in 3 weeks to join.
Yeah.
And then the metric I looked at, I was like, okay, so there's a monthly fee to be a member here. I paid that off in another less than 3 weeks. So I was like, I've got a whole year paid for in my first 6 weeks of trading, with just 4,000 more than your recommended start. And it just happened to be that much. And that was kind of let's get my feet wet. Let's start. And then now it's, as you teach, keep putting money in. And I'm just trying to accelerate the growth at this point. So it's going bigger and bigger, bigger, but it was so effective. I mean, I made money on my first trade and I knew nothing about this. It was phenomenal. Yeah. I mean, this is life changing. I talk about this is like one of the 5 pivot points in my life that when I look out, I go, this changed the way I think, the way I operate, and what my future is going to look like. The other ones was being saved, this being married, having children, learning infinite banking. So I'm putting you in the top 5 of
All
things.
right, man. I'll take it.
Trajectory of my life. And I don't say that lightly. Like getting married and having kids are a pretty big deal, more important than this, but this is right behind those and how that's going to change things for them.
Yeah, and it does tie into that at that level of priority, because when you really grasp how this works, you see the transformation it gives to your children, right? Like, I mean, my son is 10 years old and he's been a guru options trader since 8 years old, right? Like, I pay him, I've got a few companies, so he's on payroll, and you can't pay him much as an 8-year old, but I can pay him a couple $100 or whatever, a couple $100 a month now. And he does little small tasks and stuff they're all justifiable. And he does work in the company. He does all the 3D printing for all of our prints he manages that. I don't even know how to turn the 3D printer on. He does all of it, man. Got a $5,000 3D printer and he runs it. And so he does all that stuff, and I pay him a salary. I pay payroll taxes on him, right? And I file a tax return for him. Well, now he has earned income. So now we set him up with a Roth IRA. And after 2 years with like minimal contribution, like $2,000 a year kind of contribution, he's sitting there at like 10 grand in his account already in a retirement at 10 years old. And because it's such little income, he didn't have to pay taxes on the other side, just some payroll that I pay, right? So he never really paid taxes on the input side. It'll grow tax-free until he's 59 and a half. And then when he takes it out, it's tax-free because it's a Roth IRA. Like, this is, my partner, Ben Settle, is, the email guy. So he likes this analogy. But I like to say that our framework, especially when you get your kids in it early like this, it allows them to opt out of society. It allows them to opt out of inflation. It allows them to opt out of worry. It allows them, honestly, to opt out of having to go get a job. Like, if you get your children going in this, by the time they're in their 20s, they'll be looking at an income level that could sustain anything they want, including college or full-time income, right? And
like we said in the beginning, the job market as we knew it and as we've experienced won't exist. My youngest is 6. My oldest will be
Yeah.
15. It's not going to exist for my 15-year-old, let alone my 6-year-old.
No, people don't realize that. You know, Optimus Prime, the robot that Tesla's building, they already are in their third version of the software, which is going to be the production version of it that they're going to be rolling out next year. And they're already scaling up to be able to produce 100,000 units a month and going faster, right? I took this trip in July, right before I had my heart procedure, so that preempted it actually. I just had a triple bypass in August, so I'm still kind of in recovery mode here. But when I went out to Oregon in July, I was driving down the road and it was really surreal. You know, when you just kind of have that just surreal kind of experience where all of a sudden you start to see things that you just didn't see before, right? And I've done that cross country trip from Oregon or from Florida to Oregon and back many, many times. And so there wasn't anything new about the trip per se, but I saw it from a different perspective. And the perspective was on that whole trip, there wasn't anything that I did, stopped, or spent money at that a robot wouldn't have done a better job of, right? Like the gas station service attendants, terrible, right? You go into the store and get some food, and the waitress has got an attitude and doesn't remember your order properly and don't believe it. I don't care what restaurant you go into today, it's nothing more than a fryer in the back and a microwave and a freezer, right? There are no chefs anymore. You've got to pay, if you're not paying $200 or more a meal, you're not getting fresh food. And that's just the reality, right? If you're not going to like Ruth's Chris Steakhouse and paying $200 for you and your spouse to have dinner, you're not getting fresh cooked anything. It's just frozen everything. All the appetizers are all pre-frozen. They just throw in a fryer, and that's what it is. A robot could do all of that and do it better, right? And you just start to walk through this, even when you go into the kind of the artsy fartsy stuff. Like imagine going into a gallery, the robot would be able to tell you everything about that picture, that painting that you're considering, that the person that's making $15 an hour there, they could care less, right? They don't get a big enough commission to be concerned about it. And the only commission is going to go to the gallery. They're not going to get squat. So there's just, it was so surreal to realize like everybody that I was seeing is like, yeah, your job's going to be gone. Your job's going to be gone. Your job's going to be gone, and it's entire industries that are going to get wiped out with this. And I don't think people are prepared or realize that. And the CEO of Robinhood said this not too long ago, and he said that as AI takes off in the next 5 to 10 years and starts replacing that, the only way that people are really going to be able to make money is through capital growth and investment and trading essentially. And of course he's biased because he's the owner of Robinhood, a trading platform. I 100% agree with that. And that quote, they attribute it to Biden that started it, but the learn to code quote, right?
Yeah.
That's the answer to everything. Well, don't bother, because AI can already code faster and better than you can ever learn it anyway, so that isn't going to help. What you really need to do is learn to trade. Learn to trade.
Yeah, the coding is the jobs that are being laid off right now in mass across the board. I actually have that quote from Vlad on my notes here in that discussion. And I do want to go back to talking about what an option is for someone who's like,
oh, sure.
You're saying it's easy. You're saying anyone can do it, but I don't even know what it is. But I want a few threads to kind of tie together. And you said, you're a serial entrepreneur with 28 companies that you've started, right? But it sort of seems like you found your thing. I know you still have other companies, but like this seems like it. And I feel the same way. You basically laid out our framework in describing it sort of indirectly. Like we always talk about our model, our order of operations, financial order of operations: protect, save, grow, in that order. We are very big on growing and growing effectively and optimally, but we prioritize, at least with what our role with our clients is a protection and savings component. And then we build a wall there because, what good is my options portfolio if I die tomorrow and my wife doesn't know how to trade it? What good is this investment portfolio if my wife's gonna have to fire sell everything if I don't make it there? And so the protection side, the savings side, we hammer that because the average American savings rate's under 4%. It's atrocious. People can't get through emergencies. So our product, our asset that we use is optimal for those two elements of it. But you're right, it's not a growth investment asset. We use it, we leverage it and get these hyper efficient policy loans where we control the payback schedule to grow. And I'm currently taking out policy loans to fund my investment accounts here with low stress options. But we like to expose our audience to things that we're doing and learning on the growth component, even though we're not financial advisors. We don't put them in these things. But I kind of feel the same way that I'm putting words in your mouth that you found your thing among your 28 companies, but I feel the same way. Like on my growth side, this is my focus now. This is just incredible. And I think that the big narrative in the debate, like in the macroeconomic environment right now, is the debasement trade. It's the idea that everyone's realizing, okay, that they're not going to let a sustained recession happen. That's been outlawed. Crypto and gold, like these stores of values as the market sees them, are exploding right now. And the interest in them is huge because, all right, they're not going to stop printing. They're going to continue to shrink the denominator. And therefore, we're going to see CPI go up, but we're also going to see asset price inflation. And you need to get on board that. And now this is where the pivot happens. This is where I think the buy and hold investors might get left behind because that is not as efficient as you might see when you just see that mountain growth. But I do want to get back to, can you just give sort of a high level overview of what an option is? Like if you say we're selling puts, we're buying calls, whatever, just for someone who doesn't have any idea what that is, to make them understand a little bit and feel comfortable with, maybe I can jump into this.
So, everybody always gives the very technical definition of an option, and then everybody on the other side of that still has a blank look on their face like, okay, great, well, what does the hell does that mean? Yeah. So I'm going to tell you kind of the history of options and a story and make it make sense for people so they can really understand it. The very first case of an option being used was about 300 BC. And it was from a Greek philosopher and astronomer by the name of Thales. And Thales used his astronomy, his knowledge of astronomy to really predict the weather patterns. And he was really good at kind of knowing how things were going to be in the upcoming season, right? And so he kind of decided to put his money where his mouth was and said, I know this next harvest that's coming in is going to be really good. I just know it's going to be good. And I want to lock up all of the olive presses in the region because I want to just have a massively good crop and I want to be able to go sell olive oil. But the problem is if it's a great crop, then all of my competitors are going to want to do the same thing and they're going to use the presses and I will just get some little sliver of the market, right? And it's like, I got to come up with a way where I can dominate the market. And so here's what he did. And understand that options are fundamentally about leverage. They're about leverage and defined risk. Defined risk. Okay, so let's talk about how he did that. So what he did is he went to all of the olive presses in the region, all of it's not a factory, but what you would call it, where they had the olive press machines, and he approached all of them and he said, here, I'm going to make you a deal. We don't know what's going to happen in the market next year. We don't know if we're going to have a good harvest or a bad harvest. I'm going to pay you a small fee. And that small fee is not going to be great, but it's going to be better than nothing. And if the harvest is crap and nobody gets any, you're not going to get any money at all. But I'm going to give you a fee so that you guarantee that you'll have something, even if it's a bad harvest. And they're like, okay, we like the downside. What's the upside, right? And he said, well, here's the upside. The deal is that I get exclusive use of your olive presses and they're like, yeah, but what's that going to cost me? It's like, no, it's not going to cost you anything because I'm going to pay you full market price. I'm going to pay you the full going rate for the use of your olive presses. And you'll get to keep this early fee that you're getting today. You'll get to keep that as a bonus. So you're going to make more money on this deal. And the only thing I'm asking is I'm buying the right to have the right of refusal. If I've got enough volume to keep you busy, then I have the right to get exclusive access to your presses. And the guy's like, well, that's a win-win. I'm down for that. And what if you don't need my presses? Can I sell them to somebody else? He said, yeah, if I don't, want your presses, then you can sell your time to somebody else. Well, do I have to give you your fee back? No, the fee you get to keep no matter what. And so it was a brilliant kind of plan. Well, the crop came in. It was a wonderful crop. And he locked up the whole region and had massive production, and he dominated the market, right? Now, this is what is referred to as a call option. And he bought a call option. We never buy, but that's an example of how options work. And what he did is, for a small fee, he controlled leverage. Now the fee is defined. He knew what the fee was, and he was okay with that risk. If it didn't work out, if the crop bust, he was okay losing that small amount. Okay, so he had a defined risk, but yet he had massive upside potential and leverage. And that really is the best way to explain options. But we do the opposite. We do the seller side of the options. So think of it like this. There's an insurance salesman. If you are an insurance salesman, that you can sell policies for Geico and you can sell policies for Progressive. Okay. And so, Brian, you're with Progressive right now, and you come to me and say, I'm really not happy with Progressive. They just kind of screwed me over and upping my prices. I want to switch over to Geico. Okay. Well, if I sell you a policy for Geico, I don't work for Geico. I'm just a broker, right? I sell you the policy. I get a commission, right? So let's just say it's a $2,000 policy and I get a 10% commission. So I make $200 on that. Is my commission dependent on whether or not you get in a car accident or not?
Not at all.
No, I got paid. I'm out of here, baby. It's your problem now. Deal with Geico, right? That's what I'm going to tell you. You call me like, I got hit in an accident. These guys rear-ended me. I'm like, sorry about your luck. Call Geico, right? That's what the broker's going to tell you, because all they're doing is they're a middleman and they get a commission. That's essentially what we were doing. Think of an insurance contract. First of all, it's a 6-month policy, right? It's a contract. It has a term. It has an expiration, right? And it has a price. What we do with options, the same thing. We sell an options contract. It's a weekly contract. We put up some money for that contract. We loan it to the market because we're the bank. We lend the market for that week. But instead of a bank having to wait for monthly payments coming in and waiting for years to collect their whole interest, we get our interest the moment we sell it. We get paid on Monday, the day we sell that contract, and the money is cash in the bank. We can pull it out the next day at the ATM. As soon as it clears overnight, next morning we can pull it out and spend it if we want. Hell, I would never do this, but you can literally put an ATM debit card on your brokerage account if you wanted, and do all of your shopping on Tuesday off the income that you made on Monday, right? And then that's the way it works. We're loaning money to the marketplace. We're getting paid up front, and we get a defined income. The income, that defined risk for the buyer, is a defined income for us. We get a fixed amount. So let's go back to the banker analogy. If the bank loans you money, Hans, to invest in your business because Hans is a schemer and he's got this great idea and it's going to make him millions, so he wants to go borrow $50,000 from the bank. Now, if it makes you millions, does the bank get any more interest on the $50,000? Do they get any participation in your success? No, right? Not a penny. But if your venture fails, do you get to discount the interest you paid to the bank and say, I can't afford to pay you because it didn't work out? No. They say, well, take your firstborn child and, take your home, and you can go find a new wife after she abandons you, and your loan will be paid in full, right? It's the same kind of approach, right? It's just a really simple relationship. So, with options, we are just loaning money. We're getting fixed amount. We're depositing it on Monday. We get that payment. Now, what happens if the trade goes the other direction that we want it to? We just push it out another week, and we just say, you know what, let's wait. And I won't get into the technical jargon. Technically, this is a roll, but it doesn't matter. It's just extending the contract, right? And all we do is push it out another week. It's kind of like playing kick the can, right? We were all kids. We played kick the can down the road. You just kick the can. There's only really two rules in kick the can, right? One, kick the damn can. You can't strike out. You can't swing at it and miss, right? So you got to hit the damn thing. And then the second rule is you got to keep it on the road, right? You can't kick it off into the berry vines, right? And that's really what our framework is. We kick our trade down down week after week if necessary, but usually not necessary. And the only real rules, we've got kind of a framework that you follow the guidelines, play within the rules, stay within the framework, and you just keep getting paid week after week on it until the trade closes out in our favor.
And I think to further that insurance analogy is, if it hasn't gone our way, when we kick that can or when we roll that forward, we're just extending the contract with the same company. You're staying with Geico, and we collect the next commission because they renewed their contract. If the thing closes as we want, it's almost just like, hey, we're going to move to Progressive now because maybe that company lines up better with what we want to do, and we're going to do a new contract with Progressive. When that expires, we might do another Progressive one, or we might move on to Nationwide. But we're just continuing to do a new contract, whether it's with the same or a different company, and we keep collecting the premium as that insurance salesman.
And just to put just for even further simplicity or just clarity, we're saying contract, but what we're saying here is the contract itself. What you are transacting over is the right, but not the obligation to either buy or sell shares. So if there's a $10 stock right now, and Brian thinks it's going to go higher, he might purchase from Troy. He might say, hey, I'll pay you the right to buy these shares at $10 so that when the stock goes up, like I think it's going to, when it's $15, I have the right to say, hey, you have to sell me the shares at 10. So Brian buys the shares from Troy. Troy has those shares, and now the stock's worth 15, but he only paid 10 for them. It's just, and then it's times 100 because a contract is the right to do that, buy or sell 100 shares at that price. And so just because if people have zero idea, when we say a contract, we mean the right to purchase, but not the obligation.
And that's where you start getting in the devil in the details, and it starts to confuse people. But trust me, we explain all this. You'll get it. But think of it like this, okay? Let's say I live here in Florida. Let's say that I've got a friend that has beachfront condo for sale over on Cocoa Beach, but it's not for sale yet. But him and his wife are getting divorced, and he knows he's going to have to sell this thing. And I find out about it, and I say, well, dude, I've got some connections. If I sell it, will you flip me 25,000? He's like, oh yeah, hell yeah, I'll do that. If, make my life easy. I don't have to go through a broker. You can do that. I mean, okay, cool. So now I happen to know a guy that just told me last week he wants to buy a beach house over on the east coast of Florida. And I said, well, hey, I've got a spot for you. And so I make that middleman deal, right? Now, that deal is worth something. That deal is worth what? It's worth $25,000. It's a $25,000 commission. I'm not really transacting the underlying apartment, am I? No, I am just transacting the value of the contract. Now, my guy that I was going to sell it to, he falls through. But I run into another guy and he says, well, I'm not interested, but I know somebody that's interested. So I'll tell you what, 25,000, look, what do you say? I give you $5,000 for that, and I'll take the $25,000 deal. You get $5,000 for doing nothing, and I'll go find the deal. Would that not work? Yeah, because the contract itself, to be able to obtain that $25,000 for a sale, has value. The contract has value. We're not talking about the value of the apartment. We're talking about the value of the contract. And that's what options are. Options are contracts that have value, and we trade the value of those contracts. They're connected to underlying stock, but it's actually the contracts that we're trading on, right? And that's just a practical kind of explanation of how that could work.
It's important to hit on the value or like the enormity of the derivatives market, because the point you made earlier that what if enough people are doing this, and you what's the Portuguese phrase you use, where like a gnat on an elephant or something, but we're such a tiny fraction of this market. And if you think about like when we talk about an M1, M2 money supply, there is the money supply, which we know is exploding, but then built on top of that, there is this enormous mountain of derivatives. Think about, there's a baseball game happening, but then there might, World Series game, there might be $100 million that are bet on that baseball game. So the baseball game's happening, and then there's this mountain of money being made on the outcome of this game that has nothing to do with the players actually playing. It's built on that, but there's like the game happens, the stock trades, but then on top of the stock, there's this enormous mountain of money being made on what that stock is doing from people that don't even own the stock. And so we're participating in that. And that is that's not even factored into the money supply. This enormous, the derivatives market is so astronomical that you can't comprehend numbers as large as the derivative market is on top of the money supply. And so we're taking our, we're basically funding the idea that, we said that the debasement trade, the market tends to go up. And we think that the Fed is basically shrinking the denominator to ensure asset price inflation. If it's going to keep going up, the majority of people want to own stocks and have them grow. Hedge funds, investments, ETFs, everything. They're owning these stocks. And so they're basically on the way up. They're saying, we think these are going to continue to go up. That's why we own them. But we're paying a little bit of insurance as a hedge in case they go down from time to time. So we're basically there just keep continuing to provide that insurance over and over and over, riding the market. And it's just we're in it for a short time. It's just such a safe, it's incredible. We're not going to get into the strategy itself, but it's incredible. Go to remnantfinance.com/options, learn about it, check it out. But I think that's a good, simple overview of what an option is. And so another point that
people always get concerned because they're like, well, what happens if you grow too big? What happens, so that's all. Look, I'm trading a $3 million account. It doesn't even make a dent in the market. There's, hedge funds trading hundreds of millions of dollars per day on these accounts. Look, getting too big, if you ever have that problem, congratulations. You've just multi-generational wealth, right?
That's a high quality
it's not an issue. Yeah, it's not a problem. All right. And so the second thing, well, what if the company your company, Troy, what if your company gets too big and you got too many students, you're all taking the same trades, you're going to change the market, blah, blah, blah. No, this is not we're not spoon feeding you the trades. We're teaching you the framework and you pick your own trades. So students are trading all different types of stuff. But again, even if they were trading all the same stuff, the only thing that would happen is it would be better for everyone. Because what ends up happening is that, think of it, if you've got a used Honda Accord that you want to sell, and you live in the middle of Podunk, Arkansas, right? And so there's only one car dealership in town, a used place, and you take them your $12,000 car, and they're like, man, nobody buys Hondas here. This is the South. Everybody buys GM or Ford. If I got to buy a Honda, I'm going to only give you like $4,000 for that. And you're like, it's 12,000. Blue Book is 12,000. They're like, that's all it's worth to me is $4,000. You're screwed. That's all you get, right? But if you live in Orlando, there's hundreds, if not thousands, of car dealerships all around you, and they're all going to compete against each other and you're probably going to get $8,000 for that 12,000, and they'll flip it for $9,000 in a couple of days and make money, right? So the more people you have, the more competition you have, and we're selling contracts. And so whenever we do that, there's a buyer and there's a seller, and that means there's a price, a spread in between that price. Well, the more people participating in the marketplace, the tighter that spread gets. And that's all you got to worry about. I mean, if you're trading, Tesla, you've only got a little tiny spread, but if you're trading some stock nobody's ever heard of, you might have a 20-cent spread, right? So the more popular, the better.
And when you're talking about a 1% target return, which everyone, in our network that's doing this and people on the platform, most people are exceeding that 1% average. But 1% a week is what 67, 68% annualized. So even if you fall 50% short of your goal, you're still tripling your expected return on the, the quote
34%.
average S&P.
Yeah.
Yeah.
Yeah. And that's why I always laugh at the bean counters. Oh, I didn't get my 1%. Well, who cares, dude? Who
Yeah.
cares? So you only got 53% return on your portfolio this year. Oh, damn, you only beat every major hedge fund in existence. Like, I mean, you even beat Hillary Clinton and Nancy Pelosi, for God's sake, right? I mean, who cares? You're making Nancy Pelosi kind of insider trading money on that deal. So be happy.
And I think something to tie into that you mentioned earlier is the fact that we can make money following your framework in an up market, a down market, and a sideways market. So like I spoke to a gentleman about this the other day, and he was talking about, I bought Nvidia cheap and it's up 100% last year and the year before. I said, that's awesome. Like that was a phenomenal purchase. But would you sneeze at doing potentially 68% every year, even with the tank, when the stock market tanks, and it's coming at some point? We don't know when. None of us have that crystal ball, but it's coming. And if you could still do 1% a week, what's going to be better for your life?
Yeah.
Having an
The other
awesome,
thing you have to understand is that investment,
yeah,
you didn't make any money.
yeah, it's all
And
unrealized.
it's all unrealized. If you don't sell it, you made nothing. And this is a part that I have to like mentally lobotomize people about on
Right,
their financial education, because they're like, oh, I'm up 400% on this. Dude, you haven't made a penny. A
right.
penny. And they're like, yeah, but I could cash it out anytime. Yeah, and it could crash at any time and you get zero.
Yeah.
We don't have that risk. We don't have this risk where we're holding something for years to potentially get some
Hopefully.
payout, right? What happens if you're a buy and hold investor and you're in your 70s and you go to retire and that's the year the market crashes 50%? When you need to get paid. That's when you need to get paid. You just lost half of your money. Now, in 5 years, it comes back. But you don't have 5 years. You die when you're 74, damn near penniless, because you can't even pay your bills because you retired at the wrong time. Your timing was bad. This happens to people all the time. We don't do that because we're income. We're not investments, we're income. So we're generating cash flow every single week. And that's the difference, right? And so like recently people think, well, Troy, one of the other objections we get all the time, people are like, well, Troy, the market's been up, up, up. So yeah, you're doing great because it's a great market. You don't know what a down market is, blah, 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 blah. Well, guess what? We just had a 22% pullback with the tariffs, right? 22% market cut. And we were down for 4 months. 4 months. The official date that it dropped was on February 19th, and it recovered on June 27th. So about 4 months and a week. Okay. Now, during that time, if you were a buy and hold investor in the stock market, you would have made exactly zero. It would have taken you 4 months to get back to zero if you were patient. But what if you retired in the middle of that, right? You would have lost 20% of your portfolio if you were a buy and hold investor retiring. Okay, but what we do is we're trading every single week. And there's a phrase I use over and over and over again. You guys have heard me say it dozens of times. We trade through the turmoil, right? When the market is crappy, we don't pull back in fear. We just keep the discipline. Discipline. We trade every single week. Doesn't matter if the market's going down, we keep trading. And what we're doing is as the market's going down, we're making little chunks of profit every single week. And that profit is reducing the price of entry for us. It's lowering. It's called dollar cost averaging because we're continuing to make not theoretical investments. We are making hard cash that's entering into our portfolio. If we had to retire there, we could pull that money out and spend it and have retirement money to supplement our retirement at that time, right? Because we're generating income every week. Well, during that time, that market from February 19th, my account at the beginning of that, and I show this on the webinars to people and everything, and I just log in real time in Schwab and show people. My account had 1.567 million at that point. It's an easy number to remember because it's 567, so I just remember it. It's 1.567 million on February 19th. Okay. Then fast forward to point zero, where you go all the way out to June 27th, and the investor would have made nothing. They would have been back to zero. They'd have been like, oh God, I suffered through a 22% loss. I'm back up to zero now. Great. My account on the 27th was 2.44 million.
Almost a million. $900,000.
Yeah, about 850,000 or so, yeah. And in that same 4 months, right? Now, I put money in as well. I add money into my accounts. I have multiple businesses. I have 4 companies, and we invest in money every week. But this is what I tell people, right? I don't create. I think you guys will appreciate this. Like, I don't create these contrived bullshit case study things, right? Like, everything we do is real life. I tell everyone that's in our program, add money into your account. If you've got an income, keep investing in your account, because the faster it, the more money you put in, the more money you can make with it, and it takes money to make money, so you want to keep it growing, right? So I do that. Now, I also did another case study in that same time on one of my individual accounts that didn't had any money, because this is a retirement account that I couldn't put money into, right? And that account still recovered in May from the February crisis. It recovered in May. About halfway through the 4 months, it had already recovered. And at the end of the 4 months, it was already way up as well. Not as much as the one that I was putting money into and making weekly deposits, but it's still in about half the time recovered, because as it's going down, we're trading, we're making money. Then what happens is we get the bottom, and it kind of goes sideways for a little bit, trying to figure its way out. Now we're into profit, because we've been accumulating more cash flow the whole way down, and now we're trading with the market prices down, and we're making really good profit on this. Now it starts recovering, and we've already broken out of the profit zone. We're already now recovered our entire loss, recouped it, and generating the profit side. And the funny part of it is, whenever I tell this story, I swear to God, it's so predictable. It's like looking up and seeing a cloudy sky and knowing it's about to rain. As soon as I tell the story, the next objection is, but what about in a lost decade? That's only a 4 month downturn. What about a 50% drop? Guys, math is math is math, okay? And what will happen is, doesn't matter what the drop percentage is, it doesn't matter the duration. You're making money through the whole cycle, and you're going to recover much faster in an account that you're doing this downward trading and generating profit all the way through. And typically you're going to recover somewhere in the 35 to 50% of the way through. So if it's a 10-year lost decade, right, you're typically in our framework, if you're following our guidelines, even if you're not putting money in, you're probably going to recover 50 or 60% of the way through that. So maybe 5 years in, you're already profitable, when the average guy is waiting 10 years and they're not profitable. They just get back to zero, right? You're going to be in the profits about halfway through, and maybe a lot less if you're putting money in. Like, if you still got an income and you're still adding to your investments, then you'll typically get out of that even sooner.
What's funny is I've got this silly little case study I'm doing. I was a government employee like a civilian government employee for about 2.5 years, but I only did the match. So it was a really small TSP, and I rolled half of it. It only had 21 some thousand in it. So I rolled half of it into a Schwab account, and I left half of it in the TSP. So I've only traded it for 5 weeks, and it had 7 weeks to grow in that time as the money transferred and released. So I traded exactly 10,676 was the split down the middle that I moved over. That account is at 11,586. I can't add money to it. The TSP is at 11,840. In 5 weeks, I've far surpassed. I don't know what the percentage change, and I didn't figure out the math on that, but it's probably 300% better at this point, because I'm actively earning income, not hoping that the C and the S fund to go up and down and what they do, and is to my benefit. It's a realized gain in there, just like you're talking about. It's phenomenal.
And your business partner John gives an example in that same time frame where he talks about how he also has a traditional buy and hold retirement account that he doesn't trade with, and then he's got his trading account. And I'm not gonna get the numbers correct exactly, but he talks about how watching his other account during that same time frame took that 22% hit. His trading account was up 13% over the same time frame. It's just we hit all the time on our podcast.
It's not 13%. That's like, the difference of the delta, right? The 13 to the negative 22. It's a big.
Right. Yeah, big spread there. But we talk about like net worth doesn't pay the bills. Home equity doesn't pay the bills. Cash flow pays the bills. And so the ability to pull, I have 6 accounts through Schwab for different purposes. I have a Roth IRA that I'm not going to put another dollar into, but I'm trading on that. I've got my investment, my primary, like I'm not touching this. This is my growth account until I need it for income down the road. But I'm looking at my asset allocation, and I'm looking at some buckets of money that I'm sitting on. For instance, paying my premium for my infinite banking, my system of policies for my whole family, pay pretty substantial premium into my policies to use as the banking system. And they're sitting in a high yield savings account as a sinking fund method. So I put money in there each month. My savings percentage, when I talk about my savings rate, is what I'm putting into these policies. And so I get paid each week. 20% of that goes into a high yield savings account to pay premium as they come due throughout the course of the year. Well, I was like, well, why am I sitting on all this capital? I have a Schwab brokerage account called Premium, and I track it on my LSO tracker, tracking premium. And so now what I've done is I'm trading that pool of capital. It's right now it's about 20 grand or so, and I'm trading that, and I'm trying to make 1% a week on that, and I think I'm averaging about 1.6 a week. And so all that did in that case, that's an example where that is not just a long, I don't look at the 5-year calculator on that because I am going to draw down on it. But in the meantime, I'm going to make as much as I can. And so if I look at how long that's going to last me as far as premium, allocation, it added about another year of runway essentially. And I have another one where you talked about you can have a debit card or checks on these. Well, my monthly spending, the account that I track and plan out and do budgeting from for our household expenses, I did the same thing. Instead of sitting in a high yield savings, it's now earning 1% a week. And that one, I actually yesterday I sent them the form to get the debit card, because when those things come due that are expected, or at the end of the month I pay the credit card bills, all of those expenses, well, I am going to start taking, that's not for growth, that's not for a long-term investment, but the bar for me used to be a lot lower of like, if a dollar is going to go anywhere else, it needs to at least make X in order to justify, being somewhere else. And so for a lot of people that don't really think through, or like don't have a lot of financial literacy, I say at least a high yield savings account. You can't just leave it in a checking account. You can't leave it in a traditional. You have to at least make high yield savings. Like that should be your minimum floor. Well, now that minimum floor is so elevated that it's like, why would I leave money, even though it's going to be spent? It's not going to be a 5-year growth, but I am contributing to it each week. But it's cool to be able to look at that and see how much more legs you can get on the same amount of capital for an intended purpose. So I have several different categories of how I'm trading this. So there's a use case for expected spending. There's a use case for your retirement savings that you can't touch or add to. There's a use case for tithing. I support my friend's mom, and 10% that I make goes into an account that I generally, help her out with her expenses. And now her trajectory has changed, because by the time we move to New Hampshire in a couple of years, we're going to move her up there too. She's going to be, like pulling income off of this account is going to literally take her from a situation where she's going to work low end jobs for the rest of her life. She knows that. And her husband left at high school when my buddy was in high school, wiped out the savings account, disappeared, left them penniless. She still hasn't recovered from that. So she's going to be working at the Macy's makeup store counter, seasonal when she gets a job. Every other month she's unemployed, just trying to get by, right? And this, with just a pretty small investment right now over the next 2 years or so until we move, we're gonna be able to basically get her an apartment near her grandkids in New Hampshire. We're gonna move her up from Boston to New Hampshire. Like it's life changing, and not in a long time. And so thank you. Thank you for finding this, and devoting your health, like staying up all night figuring this stuff out. Like, thank you. This is life changing, not only for us that are doing it, but also the impact that we can have by taking a multiplier effect to the power of our dollars that we have.
Yeah, and you used the word life changing a couple times on the call, and I really appreciate you saying that. But I mean, if you look in the Trustpilot reviews and you just go to trustpilot.com and you search for low stress trading, you'll see that theme comes up over and over and over and over again, that people use it. And we don't control those reviews. That's why we do it on Trustpilot. You don't see them on our sales page. In fact, like my sales letter literally has a heading that says this is where the testimonials should be, right? And then I tell you why we don't have testimonials, right? But if we put them on Trustpilot because we can't change them, we can't edit them, we can't remove them, right? And we've got so many 5-star reviews there that Trustpilot actually put a hold on our account. And now for our students to post a review, they have to prove that they're a student because Trustpilot didn't believe how great the reviews were. So our students literally have to submit an invoice to show that they paid, that they are a paying customer of the program in order to prove that their testimonial is valid. I mean, that's a pretty good case study in and of itself,
Oh,
right?
that is. I was in front of that. I left my review before I had to prove it. But yeah, we're over the moon about this. It's absolutely life changing. And we rail on our podcast. And Troy, I know you probably haven't heard it, but we rail on the traditional financing
Oh my,
model, the CPA system. We rail on it
it's
hardcore.
it's based on the 30s, guys. People don't realize this. The buy and hold methodology, the stuff that Warren Buffett, teaches, and everybody thinks he walks on water. Guys, he made all of his, like all when he started in, it was like in the 50s and 60s, and it was based on a 30s set of assumptions. And in the 1930s, the average company on the S&P 500 lasted 90 years. 90.
Yeah.
So if you were doing a 40-year buy and hold for General Electric, well, if they're on the S&P, they're going to be there for 90 years. 40 years makes sense. Today, the average company on the S&P, these stats, the last time they were revised was like in 2015, and it was about 11 years. So we're 10 years later than that. We're probably in the 7 to 9 year range that the average company lasts on the S&P 500 today. You can't be doing a 40-year buy and hope on
Yeah.
something that has a 9-year lifespan.
In the buy and hope model, it's like flying across the country with your gears down, your flaps down, your spoilers extended, and whatever else you could have overweight. There is so much drag on the traditional financial planning between fees, expenses, the fact that you just pointed out that most half, probably all the companies will be gone if you're in your 30s by the time you retire. All those things, it's like flying around with as much drag as you could possibly put on the airplane and hoping to make it to the other side of the country. You're probably not going
So,
to.
so I got a pilot story for you. Here's a analogy. I've never used this one before, but I'm with two pilots today, so I'm feeling inspired. All right. So remember it's like 15 years ago or so, the first round of all those fires in LA, and it was just miserable, right? I happened to be flying back from Vegas to Oregon on that particular day in my little Cessna. I had over the top of the mountains and we went up high up on oxygen, and I like flying oxygen. It's like gives you an echo boost. You feel good. But my passengers did not like the mountain flying. They got nervous flying in mountains and all that. So I'm like, fine. On the way back, we took the low and slow long route, right? Down from Vegas, went down all the way down to Southern California, and then around the basin at the bottom and up through the basin and avoided the mountains, right? Well, as we turned down, turned westward, that's when we hit the headwinds. And it was from the fires that were going on in LA. Well, my little Cessna can only do about 135 knots. Okay. And that's with the gear retracted and everything. That's all she's going to do. Right. We were flying into a 150 knot headwind.
You're going backwards.
We're going backwards. And people don't understand you can fly backwards. Like they don't understand that. It doesn't compute.
No.
It's like data on Star Trek. You say that to somebody, their heads go, huh, 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 huh. They don't get it. But you can absolutely be backwards. And the way I describe it is it's like you've got a bowl that a goldfish is in. You got the goldfish is swimming as fast as it can to the left, but you're walking to the right.
That's
The
good.
goldfish is swimming, And it's going as fast as it can, but it's still going the wrong direction on the ground, right? Because the ground is carrying it the other way. And so that's the thing with inflation and traditional trading.
Mhm.
If you're trading against inflation, you're trading against bullshit because you think inflation's 2.8 to 12%, and you think you're doing great because you're getting 5% in your, you know, money market account. And so you think you're going forward. But the reality is your ass is flying backwards because you're losing money every single day. And that's unfortunately what and don't even get me started on the inflation side of, you know, the valuation. Like we've gone down 12% already this year, just since January 1st. Your dollar is now worth 88 cents today.
Crazy. Well, and on top of that, it's like, well, we rail on that financial planning model is they use that bullshit Monte Carlo simulation of 4% and they've revised it to 3%. But, you know, to retire today on that stupid model, they say you can live off of 4% of your nest egg. They never teach people how to get down the mountain, only to accumulate. Well, $120,000 of income, and a lot of our people are pilots and exceeding that income. But let's just place it there. You need a $3 million nest egg to hope you make it through retirement. I
Yeah.
want you guys to go and I'll give our page again here. It's remnantfinance.com/options. It will take you to Troy's sales page, which, by the way, one thing he doesn't claim is being a copywriter, but that is a phenomenally written page.
Thanks.
If you
Thanks.
scroll down that page, probably half to 2/3, maybe it might only be like a third. It's a long page. There's a calculator. There's an embedded calculator that shows you 5 years with the numbers you want to put in at 1%. But put a number in there. You don't even need to put a number in there. Put your numbers in there and check out what this can do for you in 5 years.
Yeah.
But think about this, $500,000 with his framework doing 1% a week. That's $5,000 of income, which Troy emphasized here, a week. Multiply that by 50. Let's say you go on vacation and don't trade for 2 weeks, or you're sick. That's $250,000 a year you can live off on a sixth of what the financial planners are telling you.
Yeah. It's absolutely insane.
If you're 60 years old and you're looking retirement down the nose and going, oh shit, I don't know if I'm going to have enough. I'm going to have to work until I'm 80. You need this more than a 30-year-old needs it because of the future with the AI and the future of the world. But you can literally get there.
Yeah.
In 5 years, 6 years, 7, 10 years, whatever it takes, you're going to be better. You're going to be better off. Like this will impact your family for generations. You just got to start. Yeah.
What's crazy is that calculator, it only goes to 5 years.
Mhm.
And we do that for a reason, because if we put it out beyond 5 years, the numbers get so big, people just, it blows their mind and they can't believe it, right? And
Right.
yeah, but when you really comprehend what 68% annual, you know, return does to your account and the compounding that creates, it creates entirely different perspective, entirely different things that you can do. Like I can buy my 10-year-old son a $30,000 car for $1,000 because I can just put $1,000 in when he's when he's not even a teenager and just trade it for a few years, and by the time he's ready to buy a car, it's paid for, right? Like the way that it compounds is so incredible, and a lot of people on that calculator too, you can put a negative sign on the contribution, you can put a negative in there, and you can do a payout. So you can say, well, I want to pull out, $1,500 a week. And then what's that going to do? And you see it's still growing even when you're pulling the money out. And that's, the beauty of it from my perspective.
I'm a spreadsheet nerd, and I built out, I recreated the calculator in a spreadsheet, and I put the same assumptions in: how much weekly contribution, what's my rate of return, and then any capital inputs into it. But I also added another column, which was withdrawals. So I can put in, for instance, for my friend's mom account, here's how much every once a month, every 4 cells, basically, I take out this much. What does it do? And then I also have, I double that, and I have two of the same two of the same sets of columns, and one of them takes a 50% multiplier of the actual. So the first column is, here's what this account, whether it's for my friend's mom, whether it's the Roth IRA, whether it's for just my investment account, here's what I'm actually currently average, my average rate of return over my experience so far. Here's the actual result. and here's what it would do. And then the next column over, the next set of columns is if I fall 50% short, here's the results. And when
Yep.
I'm making plans, when I'm planning for moving my friend's mom, when I'm planning for, hey, if I want to take a year off and do what your business partner is doing with a semi-retirement in Portugal, at this time, here's what I can expect. I want to make plans off of if I fall 50% short. And so that's what that second column has for me. But you can really play around and you can just see how powerful it is. Like you said, even taking those withdrawals, I can schedule that out. And that's how I know exactly how long that money is going to last me when it's meant to pay the premiums on my policy, when it's an expense account, or when it's just growing. And then, hey, if this year I want to take out 50 grand at this point in 10 years, I can do that. It's just, it's so cool to be able to kind of see the future, and even setting very hyper conservative expectations. That's not,
Yeah.
I'm actually achieving the 1.0 column. That's my current rate of return, my average rate of return, but I can still be hyper conservative and the numbers are still super, just insanely impressive.
It really changes the dimension. So I don't know how many people you have that like live overseas or that move overseas to retire. But so as an example, my mother-in-law sold her house and she's down in Brazil, and she basically got 32,000 for it, 32,500 and American dollars, right? So their money is about 6 to 1 what ours is. So it's like, $200,000 house basically, right? And so it was really hard for me, but I convinced her to let me, help her with it. And I said, just let me trade this for you because, and she's like, this is the most money I've ever had in my life, right? And she was really fearful about loss. And I said, so she was staying with us at the time. So I took her outside and I said, I'm not saying this to brag. I just want you to understand the difference in money between our two countries. I said, that car is 40,000. That car is 60,000. That car is 140,000. That's my Corvette, right? And that one over there is 65,000. I can sell any one of those cars and pay off, and they're all paid for. I don't know anything. So I can sell any one of those cars and just write a check and pay what your 32,500 is. I will personally guarantee that you will not lose anything. Right now, this is an offer, you can only make with your mother-in-law, right? But I personally guaranteed her. And so she's like, okay, I'll trust you to do this. And so I took over account. At the beginning of this year, we've been trading it for about 2.5 years. Beginning of this year, it was already up to just over 100,000. And now today it's over 140. And she's taking $2,000 a month out of the account. And that 2,000 in Brazil is like 12,000 for us. It's like 6 to 1. So that's like, and I had to convince her to do that. She was only taking 1,000 because she didn't want to take too much money out. And I'm like, it's making 4,000 to 5,000 a month. You can, there's no problem.
Go ahead.
So, she is essentially completely retired and living on a really good salary, not like, get by retirement. I mean, that's, most people in Brazil, like the minimum salary is like 1,500 reais a month, and she's making like 12,000 a month, right? So she's living on a really good income, and yet the account is still growing, and it's only a $140,000 account. Like, it's not like this is, that this is some multi-million-dollar account, right? Now, obviously, she's living overseas, so her expenses are less, but I'm just kind of putting it in perspective. It changes the entire paradigm of what you can do because of how quickly the returns grow. And that's what's encouraging to me. You start thinking about things like, I want to do something in the group at some point where I'm going to pay off somebody's credit card and let them pay me, $10 a week or something, just to show them how, powerful the money compounds so quickly. Like, you can all of a sudden, it just is really different. Like, even a 15% loan doesn't sound like a bad thing when you're making 68% on the money, right? Yeah.
Yeah, and that's what's so important about this, even getting out of all the philosophical stuff and the trashing on the government and the inflation, is like, you are changing lives with what you're teaching here. Trajectories of families, the ability, like Hans is talking, to help somebody that he's not even related to. You have stories of doing that, which are phenomenal, that you've shared. If you're in the group, you would hear those. It's just like, you can really, really, really impact people's lives who are good
So how,
people and just never had this. And it's so amazing,
So like, how can I'm going to flip this on you guys. All right. So you're supposed to be interviewing me, but I'm going to flip it on you. And, I always look at these interviews now and critique of myself because we always get people, this is bullshit. This is too good to be true. Blah, 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 blah. It's a scam. Da, 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 da. I had somebody say, oh, it's an MLM. I'm like, yeah, the NASDAQ's, it's an MLM. Yeah. Okay. Whatever. Like, people come up with the most asinine horseshit. But the one thing that we get all the time is, this is just too good to be true, right? So you guys have both been in it, and for months. There's really only three things that we really kind of structure things around. 1 to 2 hours a week of your time, right? Almost never lose money, 98% kind of win rate, right? And targeting about 1% a week. You're not going to guarantee 1% a week, but some weeks you go more, some weeks you go less, but that's our target, is about 1% a week. So on those three things, first of all, anything there that's BS that I'm not, you guys have both been trading this for months now. So is there anything there that's out of, how much time do you spend, Brian? And then how much time do you spend hands trading each week?
I've got two sides to that story. I spend less than 2 hours. So I go on Saturday or Sunday, depending what my week looks like. And in the first week I did this, it took me 2.5 hours to figure out what I was going to trade. But
Sure.
like anything else, you're going to have time up front. You're going to have to study this for 20, 30, 40 hours to be ready. Now, just months in, I spend probably 30 minutes at my kitchen table on Saturday or Sunday. And I just say, hey, here's kind of an idea of what I might want to do that's probably going to change tomorrow. Takes me about 20 minutes to follow your framework on Monday because that stuff changed and I've got to do some quick research and I'm not as fast as you yet, and about 5 minutes a day, every day in the afternoon. So far less than 2 hours. Now, if I'm in the car, I'm listening to old recordings that you put out there. And when I'm sitting around and I have some time, I'm reading something because I enjoy it, not because I have to. If I said, I hate this stuff, I just love that it makes me money, hour and a half a week.
Yeah. How about you, Hans?
Yeah, I'd say the same. I could trim it down. I'm having so much fun with it that I'm back in 2024 weekly calls. I plow through 4 or 5 of those a day, just at 2x speed. And I've gone back through the core framework twice now. I'm starting the Bitcoin course over again. I'm trying to listen as much as I can. So I'm spending a lot of time by choice, but if I had to, yeah, an hour to 2 hours a week is very accurate. And I got a real quick aside. I got a put assigned on Qubit that the strike was it was above the strike. So like I wasn't expecting it, but all of a sudden now I have these shares and I've been almost daily making money on that thing because it's moving up and down so much. So like I'm slinging that thing. I'm having so much fun trading and I'm like 19% in 4 weeks on that one position. But if I had to, like Brian said, if I had to trim it down, it could be an hour at most right now.
So have either one of you had any losses that you've taken?
Not a single one.
Yeah.
Nope. I can actually look 0.77% was my lowest week so far across.
No, that's your week.
Accounts.
But I mean, have you had any trade where you lost money on the trade, where you ended up taking a physical loss?
I haven't lost anything. I've only gained.
Yeah. And the 1%, so you're a little bit under it, Hans, no big deal.
Well, that was 1 week. My average across the board on all of it. That was for one single week. My lowest 1 week return was 0.77%.
Okay, what's your average?
1.16, 1.68, 1.09, 1.28, and 1.79 across the accounts I'm actively trading.
See, and there you go. Just over 1%, right? I mean, that's the target is real. Brian, you kind of in that same thing where you're hitting those numbers?
Yeah, I probably went, as I learned, a little extra aggressive and too close to the strike price. And if you don't know what that means, that's okay. But in the beginning, so I had some really high initial weeks, all successful, all closed perfectly. But then I started trimming it down and getting more conservative like you teach. So I'm actually at an average of 1.75 since I started. It wouldn't be there if I was doing it the right way those first 3 weeks and not being a little extra aggressive.
Well, you got a little bit lucky. You went aggressive when the market was going up, up, up. So you were, but it's not fun to get aggressive when the market goes down. Trust me. So this is what I wanted to get back to. So now, what would you guys say to people that just say this is just too good to be true?
Well, I think like
This is what I struggle with. We get on these webinars and I have 500 people on the webinars, and that's the response I have to get. And what they
yeah,
don't realize is we are growing by 150, sometimes 200 people a month in this program. You guys see it, and we're not even really advertising. I mean, a couple of podcast interviews are here or there, but almost nothing. We're not running paid traffic, we're not running ads, and we're growing because people are just referring their friends and their family over into it because they're like, you got to do this because of the
yeah.
results they're getting, right?
A mentor of mine in the whole life business that we're in with Infinite Banking once said to me, because you get that objection, and he's like uber nerd, dives deeper than anybody I've ever met into the data and into the financial planning stuff and how the money flows. And he said to me, when something sounds too good to be true, dig deeper, don't run. Why does it sound too good to be true? Prove it out. And
Yeah.
so, just to, and with that framing and that paradigm that I've learned from him, when I joined this, and I joined it via Tom Woods, like directly, because he said to me, Brian, like, you of all people need to like do this. And I was like, all right, I trust you 100%. I'm just diving in. But I had a little bit of an objective, and I mean, don't take this the wrong way, but it's that paradigm of like, where can I poke a hole?
Yeah.
Like if it seems too good to be true, so where can I poke the hole? I'm going to keep digging deeper. And the more I've learned, I haven't found one. Sure, like you said, things can go wrong. Stock can be delisted and you can lose. A company can close. There's always risk in the stock market. But in the framework, in the possibility of consistently earning income on this, I have not found a hole, and I've dug deeper. And I just believe that that's something that you should all do when it's too good to be, when it sounds too good to be true. Dig deeper, and you might find flaws, but don't
Well,
run.
and
Running is
that's a
the
perfect
wrong answer.
advice.
What's
That's a
that?
perfect advice because I just had a guy that joined up and he wanted to talk to me first. I talked to him and he's like, "Look, I got a lot of money to put in here," and I said, "Well, I said I'm trading a multi-million-dollar account. I can help you. It's no big deal." And he's like, "No, but I mean, I got a lot. I got $10 million that I need to put into this," and and so I said, "Okay, look," and he was like wanting to just go 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 go. Right? I'm like, "Dude, slow your roll, slow it down." Okay. I'm going to tell you the same thing I tell everybody else. Start with $10,000, do one trade, trade that through, get, understanding, get comfortable. Let the framework prove itself to you. Don't just trust me. Don't just trust what other people have done, right? And prove it to yourself first. And I've told everybody that. I've told my business partner that joined when he had been a partner in the company for 2 years before he started trading it. And when he started trading, I told him the same thing. Like, just start slow, one trade, just work it through and get comfortable. And that's essentially what you're saying there, right? Like,
Mhm.
prove it to yourself, right? And honestly, the price of the program is so low that you can cover the cost in no time at all. We should raise the price a lot. Our competitors are charging, 5 times what we charge. I'm not doing it because I don't need to be doing this for money. I'm doing this because I love it and I want to make an impact in people's lives. I can trade my $3 million account and, make anywhere from on the low end 50, on the high end 60, 75, 85,000 in a month. Like, I don't need to keep going this big with it. The reason I really want to do this is because of those testimonies. When we see people that it impacts their lives, when I can, impact children, right? Your children's lives, like your children, I'm not saying they shouldn't or that they won't, but they'll have the potential to not even have to work if they don't want to, as you trade this for them, right? And that's really impactful, especially, when the robots come, because they are coming, guys. They are coming. And it's going to be really interesting. I know this probably sounded like I was really negative on that, but it's actually not. I think it's going to be a bifurcated society. I think we're going to be both utopian and dystopian at the same time. We're going to have the people that are just living like Mad Max because they can't get a job and it's just ugly, right? And you're going to have this really dystopian aspect of it. But then there's going to be all the people that have money and trading and make their money through trading, whatever. Like, they're going to be able to become painters and artists and philosophers. They're not going to need to work for their income. And it's going to be a very utopian society for people that have money. And I want to be on the utopian side.
So
Well, this is a good analogy when I think of the impact of AI, when someone's like, "Oh, it sounds too good to be true," you know, you know, that to me is kind of like comparing the conventional financial planning model to what you need to be doing now. It's like you're in a horse and buggy and being like, "Oh, that Model T, that sounds too good to be true. No way you could get there that fast." "Oh, I'm a brick and mortar retailer. Oh, you're selling things online. That sounds too good to be true." Now, if you're talking about AI and you're not using it in your business, it's like I'm a an artist, and I do graphics for, I work on Fiverr and I do graphics for people, and it only takes me 4 hours to do this. And someone says, "Well, hey, I can just put that same prompt into AI and get it in 2 seconds." And like, well, that sounds too good to be true. It's like, well, if you're going to keep that attitude and you're going to hold on to the traditional framework of, I'm just going to, get my index funds and get 8% a year, well, you're going to get left behind. You're that person saying, "Well, I need to work on my own graphics because that AI sounds too good to be true." It's like, okay, you can say that, but I'm actively doing it. I just put in a prompt as we were talking, and I just created a PDF that's better than the one you spent 2 days on. And so you can say that, you can have that opinion, but it's worth it. You should, just in your own self-interest, you should stress test this, spend the
Yeah.
upfront cost to try it, because if you're wrong and someone else is doing your job with an AI click of the button, you're going to get left behind. So give it a shot, because you need to get the, you're riding a buggy, like, and there's a fast lane going. You need to figure out how to jump to the fast lane if the fast lane is indeed real. And we have 15 or so of our clients that have joined up, and we're no one is experiencing anything but this 1% average rate of return over the course of, these weekly trades. And so some people are a weekend, some people are a couple months in, but you owe it to yourself to try this.
Yeah.
Yeah, I just
I,
want to be clear on one thing though, because I got to lay down the law on this one. I just want to be really clear because we talked a lot of AI. There is no AI in anything we do or teach. There's no AI
Sure.
tools. There's no AI trading. This isn't
Yeah.
some
Yeah.
bot crap. And I'm not just spoon feeding trades to people. We are giving you the fish and we are teaching you to fish, right? Yes, we have an ongoing fee, but you get so much for that. Like
oh,
if you're making thousands of dollars a month, why would you not want to spend 100 to continue to be in? And honestly, if that's going to cause you to get a little bug in your butt, then don't waste your money or my time by coming in the first place, because we don't work with cheap people. I loathe cheapness. I loathe it. We like to work with people that like to make money, like to move, and are willing to reinvest in what they're moving in, and that's what we do. So just get that out on the record, because I don't want any whiny cheap people coming in.
I tell people, and you can clearly see it's 3 in the afternoon as we're recording this. I'm drinking coffee. I would give this long-term military all-day coffee habit up before I stopped paying that monthly fee.
Yeah.
Like, it's not a chance. This would be like the last expense I gave up if I had to burn all the bridges. It is absolutely, like, the platform is phenomenal, the community's phenomenal, the software is phenomenal. It's like a no-brainer, man. I mean, I can't even believe somebody objects to that. And when I saw Tom in the fall, and I said, this was before or I'm sorry, just a few months ago, and before I talked to you personally, I said, "Tom, I feel like I ripped the guy off." Like, he
Yeah, I know,
encouraged
we
me,
get that.
encouraged me
And
enough.
then, but we had some guy cancel on the help desk yesterday. I won't use his name or embarrass. I should just absolutely blast him because he's such a cheapskate. But he had been there. He literally, bragged about how he'd made over 100 grand. He's like, "Yeah, I'm canceling. This $100 is just, I'm not sure I want to pay $100 a month anymore." I'm like, "You in here 5 friggin' months. We made you 100 grand, and you don't want to pay $100 a month to be in a circle and a sphere of influence that can make you, millions over your lifetime." Like those people, I just ban, I shame, I mercilessly dog on them because they deserve it. You cannot fix stupid and you cannot fix cheap. There's just
Yeah.
no way around it.
And the
Yeah.
upcoming value, without getting into details, the upcoming value of what's going to be changing with the platform and the website is immeasurable. I mean, like, get it low stress getting even low stressor.
Yeah,
Like, it's
yeah.
just crazy.
And the
Yeah,
cool thing is the
it's going from
community.
low stress to no stress here pretty soon because, we're building, I'm a software guy, so we started out as a training platform, but we're turning into a trading platform. And I'm already doing live trading on our platform now. And, we're continuing to test that and get that all ready. But it took me 3 years to get commercial API access into Charles Schwab, and we now have it. And we're moving fast and furious
It's exciting.
with this. So what it's going to mean is it's easier for you because you won't even have to do any of the tracking or downloading your data out of Schwab or any of that. It'll just be all done for you. So it's just going to get easier.
So exciting. It's so exciting. And the last thing I'll say on this, because we all have to check our positions here. The community you've cultivated, this is another reason I would never want to leave, is when somebody posts their success and their results, you get cheers. You never have the jaded person who hates somebody else's success. It is so supportive the way that people jump in, and it doesn't matter if you've made 500,000 or your first 1,000. People are cheering your success. It's so cool to be in a community of like-minded people that are just want to see everybody else blow up. That's rare. That is really rare in society.
Yeah, and people that are small accounts, people with, and the success and the celebration and help and assistance that are based on the account value, and that's what I really admire. We've got a really good group of people in there.
Yeah. Well, hey, do you have anything else you want to add here at the end?
No, I don't. I would just say read the entire sales page. We don't play any games. When you go to the sales page, you'll see it's not some little squeeze page. Opt in to the sales page and join us on a live call. We do the calls just like this. There's no, marketing gimmickry. We're not doing a bunch of fancy presentations and slideshows, no automated webinar bullshit. It's real. My partner or myself will be on those calls hosting them, and you get to ask anything. It's kind of like Win Binstein's money. We encourage you to try to break it. You can't, because I've done about 40,000 trades through this platform and on my own, and I trade 26 different accounts between all of my companies and my children and businesses and all of that. So you're not going to break it. Go through the sales page, read the whole thing. It'll take you probably 35 minutes, okay? I'm telling you, it's a long page. Trust me, I know. I wrote every word of it, and I spent over 200 hours writing that page. So there's a lot there. But I do it for a reason, because in full military, fashion, I'm full disclosure, right? I want you to see everything right off from the top. We even have a whole FAQ on there and everything for the questions that people ask all the time. Honestly, you don't even need to show up to the call. You can just read the page and buy, because the call is just to reinforce it for people and to show them my accounts or John's account if he's doing the call or whatever. It's just to make it more dynamic, but all of the information is there on the sales page. And I'm not trying to get people to skip steps. Go through the process, start slow. Doesn't matter how much money you've got, start small and let the framework prove itself. And when it does, you'll be doing what my wife did. She ripped off everything everywhere and sold it on eBay. And, we sold a car to put in there. You'll get addicted to finding ways to put more money into it when it proves itself to you.
That's the truth.
Yeah. So cool.
All right, guys. Well, thank you so much for having me on. I really appreciate it. Had a good time, and a few little technical difficulties on the internet today. I apologize if that's on my end, but I had a great time with you guys. Look forward to more of it, and happy to always see you guys in the group. Thank you so much.
Yeah, it was great chatting with you, man. We love chatting with smart people. It just lifts all the boats, and we love your heart and the way you're helping people. It's phenomenal. So this is a good one to listen to. Appreciate you coming on and spending so much time with us.
Yeah, absolutely. All right, take care, everybody.
Thanks for listening to Remnant Finance. If you found any value at all in this episode, please subscribe, leave a review, and share it with a friend.
Remember, true financial freedom comes from taking control of your personal economy and breaking free from the status quo. So stop being a passenger in your family's financial future.
Boldly take back control of your wealth. Until next time,
this is Brian and Hans signing off.